presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-873-7618.
Let's go to Andy in Boulder, Colorado. Hey, Andy, what's going on, brother?
Not much, Tom. How you doing?
I'm great, man. Yourself?
Pretty good. Hey, congratulations on the grandbaby.
Yes, thank you. I know. Tommy just sent me a picture. I mean, it's gorgeous out right now. He just was taking him out for his first walk this morning.
All
He's
right.
growling and prowling already.
Yeah, I bet.
Now, Tom O'Brien.
Okay, folks, this is Larry Pesavento setting in for Tom O'Brien today, and I thought I'd start out, a person has to take the girl that he took to the dance and dance with that one, and that's what I'm going to be doing for this next hour. I'm going to give you some warning signs. They may or may not happen, but by golly, been doing this a long time, and boy, I see green lights that are being covered by red lights, and that's not a good sign for the market. We're going to take a look here at the, oh dear, maybe it hasn't posted yet. Let's get this up here so we can see it. Oh, shut the front door. I don't think we did. Hold on one second. Make sure I get this up here. This will do it. Nope, that's not it. Just give me a second here. There we go. Let me get this up here, and then we'll be able to see it. I just love the technical part. Okay, folks, this is the NASDAQ weekly going back the last couple of years. You'll notice here that we are making what we call the ABCD pattern. It's known as the Thunderbolt. What's interesting about this one is if you'll look at the AB leg, which is the first leg up, is 10 weeks. The CD leg is up in 10 weeks. That means it's a perfectly symmetrical ABCD leg. And not only that, but the ratios measure to exactly what the high was in this NASDAQ today at 14,888. And they haven't gone above that as of yet. But this is a very, very important pattern, folks. Over the past 61 years, I've been looking at these charts. This is probably one of the most important patterns for topping that you will ever find. It is really the one that, hold on just a second here. There's somebody from RNC wanting to borrow money again, or the Republican National Network. Sorry about that. Anyway, this is what we have here is this ABCD exactly at the right price today in the NASDAQ. Now, the S&P's gone higher. The NASDAQ has made a new high. The Dow Jones has hit 35,000, I believe, in the Dow, and all things look like they're going to go up forever. Folks, go back and look to see how many times the market has gone up 10 weeks without a correction. Even during the time of April through September, we had several corrections during that time. We've had no corrections over the last 10 weeks. And not only that, it's with a perfect symmetrical ABCD pattern. You have to be very, very careful. Here, just why it's so important. Here's an ABCD pattern here in the weekly chart of one of the most actively traded things in the world, which is Microsoft. You'll see that the ABCD pattern measures to 277. Folks, that's where it's trading today. It hasn't made new highs. I don't know all I can tell you is, folks, just be really careful up in here because these things are not going to go up forever. Just look what's happening here with you'll see where the hedge funds are. Look, all the hedge funds, they're all heavily invested from where they were, several years ago. I mean, that's a bad sign. I mean, less buying possibly coming in. That's the main thing. And look at the risk on with the Japanese yen. Another one that is just setting right. Just give me a second here. Another one is setting right at all-time highs. And there's a whole bunch of others. And if you look at the amount of money that each of the households has in the market, we're at an all-time high, more than we've ever had before, better than 1960s. And remember, if you bought in 1968, you had to wait till 1983 to get even because of that bear market. You see March of 2000, which was the dot-com bubble, and here we are. Right now, we're setting at 41%, which is higher than we've ever been before. These are such warning signs, folks. I wish you could see the email that I get that's telling me that I'm absolutely crazy, and I have to answer each one by yes, sir. You're absolutely correct. I'm crazy, but crazy doesn't mean I'm nuts. All I'm doing is I'm showing you what I see, and believe me, folks, I've been looking at these charts for a long time, and got to be careful up in here, boys and girls. You really do. When I first started doing this show with Tom O'Brien back in 2007, we were looking at that big top in 2008, and that's when I became a regular at 2007. And then in March of 2009, when the market was collapsing, they were giving away Bear Stearns, and the whole world was coming to an end. We had this monster pattern upside down of what we're looking at right now in the S&P and the Dow Jones and the NASDAQ, 3 drive to a bottom pattern. And from there, I said that on that day, on March the 5th, I said the market stops going down today, and we're going to see the largest rally we've seen since 1938. And that rally has been continuing up to today. Folks, be really careful this week. I mean, this is really, really important, what we're seeing in these patterns. They might, but I'll tell you, if you see the market, and I will believe this is July, sometime in the month of July, maybe the month of August, we'll see a down day in the Dow, well over 1,000 points in one day, and it might even be 2,000 points. I know you think I'm might be a little bit off the beaten path there, but this is I have to say it as I see it, and I've been doing it a long time. And I when I'm wrong, I say I'm wrong. I don't stand in front of this thing. All I know is just be really, really careful in here. Now we had a really nice short position here in the Russell 2000 today. It was doing everything that we asked for it to do. It was absolutely a perfect Gartley pattern. We did this trade overnight. The market dropped. Hold on just a second. Someone's asking a question here that says what? But you said the market goes higher because there's more buyers and sellers. That is correct, Ruby. There are more buyers and sellers coming in. But Ruby, you have to ask yourself the question, okay? For every buyer, there's an equal seller, correct? Who's doing the selling? You have to ask yourself the question, who's on the other side of this trade? And that's what you have to worry about. Now, the one I posted here is the Russell, because we sold that on Friday, and it made 2281. It was out against us 2 points, and it backed off. And I said if it gets above 2308, which is 10 points, then we have to stand out of it. But right now, it's still holding together. Now, all I can tell you, folks, and I might not be on this show very much longer after today's show, but this is what I have to show you. The number of times that you're going to see a pattern like this in NASDAQ, you can count on one hand. And this is very, very rare what you're seeing, to see 10 up weeks with a perfectly symmetrical pattern. And, I'm one of the few people that look at that kind of stuff where I have geometry and price coming together. So humor me a little bit. And even if you're in this, pay close attention. Let me tell you another story. March 24th, 2000. I'm in San Francisco at the Money Show, and I'm showing this same pattern pretty much that we're seeing right now, this 3 drive pattern. Not as clear as this one. This is as clear as it could ever be. You couldn't even paint this as a picture if you were Picasso or Angelo Saratobi or whatever the guy's name. Anyway, this is a perfect pattern. It might not work, but be very, very careful up in here, folks. It's really something. We're going to take a little break. 877-927-6648.
Are you looking for a way to consistently add winning trades to your portfolio? Tom O'Brien is here to help. Tom O'Brien has been successfully trading markets for over 30 years. A frequent contributor to TD Ameritrade Network and CNBC, Tom O'Brien founded TFNN over 20 years ago to help educate investors just like you. Tom's daily market newsletter, Market Insights, is published every morning when the market's open to give you the competitive informational edge you need to succeed. These newsletters are packed full of Tom's advanced technical analysis and are geared to deliver comprehensive strategies for a successful portfolio. Get Tom O'Brien's newsletter, Market Insights, today, and try all of our products and newsletters 30 days risk-free with our money-back guarantee at TFNN.com. TFNN, educating investors.
What's separating you from the most successful men and women on Wall Street? That's right, information. Having all the information gives us the perspective we need to place the right trades at the right time. The TAS Profile Scanner is the premier market profile-based scanner. Powered by its acclaimed TAS proprietary algorithms, this feature-rich scanner instantly filters over 2,500 plus global financial markets, such as stocks, ETFs, commodities, futures, and Forex. This powerful suite of tools leverages instant trade filtering and strategy formulation to show you emerging trades before they happen. For a limited time, you can save $100 off your first month by using the promo code UPGRADE, and you still get a 30-day money-back guarantee, so you have nothing to risk. Level the playing field with the TAS Profile Scanner, which you can find under the Services tab at TFNN.com. Sign up today.
Hey there, I'm Andy Arbertine with Tiger Precious Metals and Stones. Whether you're looking to buy and sell precious metals or trying to find the perfect diamond ring, I'm here to help. I have over 15 years of experience with diamonds and precious metals. You can call me directly at 727-329-8245, and I will personally answer any questions you have and help you find exactly what you're looking for. I will be your personal concierge in the metal and stone business. Give me a call today, 727-329-8245.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com. Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Okay, folks, this is Larry Pesavento setting in for Mr. Tom O'Brien, the old grandpa of Tommy number 13, I believe. Tommy O'Brien number 13. I think it's 13, but he's sure a cute little guy. Boy, he's big, too. All right, let's take a look here, folks. Now, if you want to defy human nature, you do some of this work yourself, but I went back over the last 100 and some years looking at these patterns to see how well they shined up. Now, I showed the one here for 2008 that we were talking about. You'll notice those dark arrows there. That shows the perfect three drive to a top pattern, similar to what we're seeing here in the NASDAQ. Now, this NASDAQ, might go up forever, and that's certainly possible, which I certainly respect that it can. But there's a lot of things that are telling us that we're in a danger zone. We really need to be very, very important. Let's go back in time, and let's just take a look. And boys and girls, let me say now, I am not calling for a crash. I'm calling for a severe correction in the market to the tune of about 30%, maybe more. I don't know. But here's where we are right now. You see the three drive pattern there in the 1929 crash. I mean, the 29 crash really started in 1930, folks. On April the 1st of 1930, that's when the market really had its market hold on just a second. I've got to get these things up here so that you'll be able to see it. That's the first one. All right, now I'll get the second one up here, and you'll see how Larry, come on. See, I'm working under pressure trying to do this with Mr. O'Brien. All right, just one more chance, and then I'm going to be going from there. All right, one more chance after that. Oh, this is not good. There's what I want to see. Here we go. Okay, here's where the real bear market started in 29, folks. It was actually started the first week of April of 1930, but there's that three drive pattern. We're seeing the same pattern now in the NASDAQ. It's absolute perfection. Might not work this time, but it worked then, and it worked a whole lot of other times. And what I did is I went back and I looked to see how many of these patterns occurred during these major tops and bottoms, and that's what I'm trying to show you to give you a pretty good idea of what could be happening. This is very, very, very important because of the pattern is so perfect with 10 weeks up and 10 weeks in both price and time. Perfect expansion, stopping exactly at the number of 14,888. Now, if we clear above that, It's already, the S&P's already extended its number. The Dow Jones hit 35,000. That doesn't surprise me. But I'm looking at the NASDAQ, and that's been the big daddy rabbit that's been running this thing the whole way. So that's the one I'm watching. And if we look at it in the context of, some of these stocks that are in the NASDAQ, if we look at all these different ones, we've seen Microsoft. Look at Google. Here's Google. You'll see the same thing. It's making the same 3-drive pattern up here. So these patterns are jumping up, but they don't come there by accident, folks. I mean, they've been tremendous moves. You'll see. Here's one that's lagging the market quite a bit. This is the one, if you're going to sell something of the FANG stocks, the one you want to sell is the Netflix. It's actually still down today after making this 135 pattern. So not all the FANG stocks are going up, but many of them are, and they're usually making these 3-drive to a top pattern, and those are the months. Look at here's another one. Here's Amazon. You'll see again, you're looking at the same thing. You're looking at the same 3-drive to a top pattern going back to February, and it's right up there with all the others. Now you'll say, well, maybe it doesn't work this time. Go back and look at August and September. You see where it said the double top there, and you see that yellow pattern there, which is a butterfly. That's also a 3-drive pattern. That's the same pattern, and we're seeing the same thing over and over again. Now, is it going to go straight up? Probably will. All I'm warning you is just be careful up in here, folks, because your hard-earned money is not, it's not hard to remember, how to get rid of it. I mean, how to keep your money. So let's remind ourselves of that. So that's just a few of the things that I have in mind to let you know of what's going on today. I want to share some cycle stuff from our friends at Cycle Research over in Vienna, Austria. And if we look at the advanced decline line, here's another reason to be a little skeptical of the run in the stock market. And that is the fact that the advanced decline line has not made new highs for quite some time. You see here that we're already into July, and this has already turned down. It was actually turning down next week on several of those. Last week, on several of those big up days, we had more new lows than new highs being made during that time, because the Dow Jones is a price-weighted index, and that's why you're seeing stocks in the Dow Jones like our favorite here, the Goldman Sachs. Here we are. You'll see that Goldman Sachs is up quite a bit. I think it's up almost all the points in the Dow or close to it, right at the 78% level up there at 383. And we're probably going to close a little bit higher than that. But this is a very, very important place to look at. Okay, Jimmy's asking, would view a 30% correction as a 30% correction is not a catastrophic crash. I mean, on the crash day of October the 19th, 1987, the Dow was down 17% in one day. So that's a crash day. Anything more than 8 or 9% in one day, more than 2 standard deviations, that's a crash. You don't play for a crash. No. You don't. I don't think you should do that here. I'm saying I'm just saying to be really be cautious up in here, boys and girls. Look at these patterns. I'm taking Tom's time, and a lot of you folks are not pattern people, but that's what I've been doing for so many years, and I see it, and I think it's my duty to warn you. This is what I try to do in the newsletter each week, and that's what we did. Yes, it could melt up. But all we know is that we're at a real critical level where there's too many people in the market. The Robin Hoods, Friar Tucks, and Lady Marion are all in the market, and they are really, really susceptible because they don't believe the market can ever go down, because it almost hasn't, especially hasn't in the NASDAQ for the last 10 weeks. And before that, it was the whole year. So just be careful. Hey, I haven't said anything about a potential top in the market for a very, very long time. I've remained very bullish. But now with this pattern that we're seeing in the NASDAQ, you must pay attention to that. That's mother, God, and country. Here's a perfect example. This also comes from Cycles Research. You can see the advanced decline line, into early July. What it's been doing. I mean, here we're making new highs, and yet the advanced decline line is not going up. There are some stocks that are going up, but there's others that are not. So I'm saying this is not just a one-way corrigan. We're seeing signs that you got to be really, really careful up in here. It's a very, very important thing to look at. But, we might go up forever, and we probably will. But all I can say is when it does turn, and if it does, look out, because there's going to be some serious ramifications here on some of these things. We're making new highs here in the S&P as we're speaking here today, and also I believe in the Dow, and I believe probably not quite yet in the Russell. It's still backed off a little bit. It hasn't got above that critical level of 22.03. We're trading at 22.76 here in the Russell here with the time going in on our thing here. So this is I'm not talking anything about cycles, folks. I'm just talking about these patterns, and I'm seeing them everywhere. You're seeing them in commodities, you're seeing them in stocks, and you're seeing them in the indices. So this three-drive pattern needs to be respected up in here. Yes, it might melt up and go a lot higher, but at any time this week, and I'm telling you, we ain't got more than a day or two on either side, because this is the 10th week. Let's take a break. 877-927-6648.
Are you having fun trading the markets but having trouble finding like-minded individuals to discuss your trading and investment ideas with? Become an apex predator in the trading markets and join the Tiger's Den Trading Room only at TFNN.com. The Tiger's Den is an exclusive trading room where successful traders from around the world come to exchange trades and ideas. Join the den and surround yourself with the sharpest minds in the trading world. Subscribers to the Tiger's Den are also the first to have their questions answered live on air and can privately chat with our TFNN hosts live during their shows. Interact with other Tigers and Tigresses as they share trading ideas, news analysis, and discuss the market action all trading day. Subscribe to the Tiger's Den risk-free with our 30-day money-back guarantee and become part of the TFNN trading community. TFNN, educating investors.
You could be making money off the stock market. And if you're already making money off the stock market, you could be making a lot more. Check out TFNN and Tiger TV and get expert investing advice to give you the power to control your financial future. Go to TFNN.com and find the newsletter for you. Whether you're into trading gold, metals, futures, currencies, or options, you'll get advice and analysis to help you seriously get ahead. TFNN also features trading services with a 30-day money-back guarantee for new subscribers, as well as TFNN's Tiger Den Trading Room, trading software, and educational webinars for all trading levels. And make sure you check out Tiger TV for free on TFNN.com or TFNN's YouTube channel for live financial content from 8:30 a.m. to 4 p.m. Eastern on market days. Stop watching on the sidelines while other people get rich and become the investor you were born to be. TFNN, educating investors.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Okay, we're back, folks, and switch gears here a little bit. We're going to talk here about the Treasury bonds, but let's take a quick look here. Go back to the March 20th, folks. You can see here on Treasury bonds the two little triangles there. That's a 3 drive to a bottom pattern. This one worked absolutely perfectly, and as you can see where we had last week, we made a perfect 3 drive to a top up there at that 165 level. We now have a 3-handle profit in that. That's $3,000. Our objective on this is down about another 2.5 points, and I think that we probably pretty good chance of making that, especially with stocks increasing. Everybody wants to be long stocks and not being long bonds. But that's just a perfect example. Sometimes the patterns work, sometimes they don't. This one happened to be working pretty good. Now, I've had several people, ask about the gold market and what we're looking at in gold. You'll give me a second here. I'll give you a pretty good idea. We came pretty close today. We missed it by about $8, but we still think that we've got a chance here in this gold market to get down to we got down to 1790 today. We took out the lows of last week and then reversed back. We're trading around 1807 right now. I believe we still got a chance to get down to that 61% level, which is 1776. Very interesting date here for the United States of America. But anyway, that's what it looks like. Now, silver is still lagging badly, but it's still holding its own. Platinum is acting pretty good. It's been heading higher, and we're still expecting, a little bit higher prices in the platinum market. And of course, today it is still moving higher, so we still think platinum could get up to that 1164. We're way above 1100 now, so we should make the 1164 in the platinum. That's just doing the same type of numbers that we're watching right here. Now, when you were talking about silver, this just show you how silver is lagging the gold market. Now, remember, this is an hourly chart, and we have exceeded those levels at $27 in silver, and all silver could do was make a 382 retracement, and it's trading around 26. I think it's 26.25, 26.30 today. I mean, it's still lagging badly. Now, that's a discrepancy that I'm not able to understand why. All I know is if you're going to buy something, buy the strongest. If you're going to sell something, sell the weakest. That was the whole premise of doing the trade in the Russell, because you didn't have to risk very much. I mean, you give me that trade 100 times, I'm going to win on it 70. So those are the odds that you have to look at. So I think it's important that what we're watching right here. I'm getting a lot of flack about being so bearish. I'm bearish. Hey, folks, I'm not bearish. I'm just flashing caution signs. That's all I'm telling you. Just flashing caution signs, because when it comes, it's gonna. And there's no question it's coming. It's not if, it's when, because these markets will correct. And when they do, these people that are out there that have never traded very much at all, like they were in 2000 and 2007, and where we are now with Robinhood and Friar Tuck and all the other boys, SPACs and whatever. I mean, these people are going to be paying a very, very interesting lesson. And this might be the time that the old cowboy is wrong, and this is where I should take my little burro, Walter, and move out into the desert with a canteen and go fishing up in the mountains for some good old mountain trout here in Arizona. But right now, these things are acting like they really are ready to make some type of a pretty substantial move here. So I think it's important that we pay attention to these patterns. The sequel will come later at the end of this week, because if we're strong tomorrow or Wednesday, I would assume that this 10th week is probably going to extend past 10 weeks, and that's in an outlier event that we've not seen in the history of the market before, but that's neither here nor there. We're not getting any help, of course, from what's happening in Hong Kong and also China, because they're clamping down on some things. Those markets are rolling over. Our markets are going higher. Each one of them should be looked at separately. All I'm saying is there's warning signs in this market, folks. I mean, not just the fact that this 3 drive pattern, but we're seeing some technical deterioration with the advanced decline line. The fact that you've got so many people long. There's more households. We just posted that chart. More households ever in the history of the world are in the stock market than ever before. This more than 2008 and also in 1929. We've exceeded those numbers. So there's a lot of people out there that if they're not careful, And I think Larry ought to shut up now and take any questions. 877-927-6648. I've just been told that the board is lit up here at 2FNN, and Bo has just told me that this time it is different, and by golly, he's absolutely correct. This time it is different. We will go up forever. And if you believe that, boys and girls, I still have 2 shares of the Brooklyn Bridge, one of which will be available for sale no matter whenever you want to. All right, here's another one, folks, just to look at. Look where we are here. Now, this one here has continued to go up. Look at this. Look at this. Look at the spike in margin debt. This was as of June 1st. Can you imagine where we are now? Shut the front door. I mean, these things keep going higher and higher and higher. I mean, that's just amazing. You know, that's it. Here's a perfect one from Goldman Sachs. Let's just get this up here. And they've been spot on. You got to give the boys at Goldman Sachs the gauntlet when they need it. But look at this. You see, their year end for 2021 was 4,300 in the S&P. We're 4,375 right now. So this thing has been continued to go higher. I mean, this market has just been going higher and higher, but we're seeing certain signs that, you know what, maybe we ought to just pay just close attention to some of these things. Look at the valuations, okay? Just take a look at this. Look at the valuations between where we are now, and remember, this is a month old, the valuations now compared to where we were in 2000 and when they had the dot-com, the dot-com bubble ended on the 24th of March of 2000. I was at the Money Show in San Francisco, and the people were so bullish. They were showing all their equity runs and how much money they were making. And I had 250 people in the room, and nobody was listening to me. All they were doing was talking. And I got up on the desk, and my friend that was helping me run the show saw that. He thought I had lost it. He was probably right. And I started stomping on the desk, and I got their attention. I said, boys and girls, I said, you see that door? That's not a door, that's a tunnel. And there's a train coming through that tunnel at 1,000 miles an hour, and it's going to run over you. Because this is the time when the market's going to have a major, major correction. One lady on Monday, I told him, I said, the market will top on Monday. I said, the first time you get a down close in the NASDAQ, sell it. And that should be it. And it closed down on Tuesday. I got a call from a lady on Wednesday, the only person in the room. And she said, thank you for the information. I said, did you get out? Oh, no. I'm going to be buying any corrections here because this is a great time to be buying. And it was. It went down 85% over the next year and a half. So just remember, sometimes I'm right, sometimes I'm wrong, but right now I'm just cautious and I want you to be careful. That's basically the bottom line, what we're looking at here. Just be careful. It's just really important that we remember to do this. Look at the and remember, this is also a month behind. I haven't been bearish for a whole month, folks. For those of you that follow my letter, you know that I've been very bullish, but now I'm just being careful here. But look at the euphoria, and that was last month. You can see where we are now. You can see that previous euphoria was 2000, and we're far, far above that. So these are just numbers. They may or may not mean anything, but it's my duty to tell you what I see, and that's it. We'll be right back. 877-927-6648.
Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
technology around us is changing every day. With so much happening, it can seem impossible to keep up with all the information. David White's investment newsletter, The Technology Insider, is designed to give you all the information you need to understand the technology that shapes today's markets and tomorrow's future. David White has made his living staying on the cutting edge of technology. His weekly newsletter will give you specific recommendations for value tech stocks, as well as entry prices, target prices, and stops to set for each trade. Dave delivers his weekly newsletters every Friday with updates throughout the week. You can get the Technology Insider at TFNN.com for only $37.50. Sign up for David's newsletter, The Technology Insider, and get an inside look at everything the technology sector has to offer. Try it risk-free today with our 30-day money-back guarantee. TFNN, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Tom O'Brien.
Okay, folks, this is Larry Pesavento setting in for Tom O'Brien, part of the old school theory of stock markets. And one of the things we used to talk about years ago was the Dow theory. No one talks about that anymore. Ever since Richard Russell passed away a few years ago, it's basically come a year of the past. But I posted the chart here of the Dow Jones Transportations, which had been the leader. Folks, that thing topped, quite a while ago. If you'll remember, it topped around the 1st of May. And here we are near the middle of July, and this market is still coming down. This is a long-term weekly. If we look at this on the daily, you'll see here that the transportation, which had been the leader all the way up, that was the one that, made the thing go all the way up. You'll notice here that we're having a couple of up days right here. It's actually unchanged on the day right now. But it's giving you some signs that maybe, this is part of the Dow theory that they all have to run together. But that doesn't mean they're going to do it in our lifetime. So we've got to be, very, very careful of what we're looking at. So that's the main thing to remember. 813-084. Okay, I just want to make sure that you guys understand that, because this is another reason that I see some signals here that, fact is, there's so many danger signs that I can't even tell you about them, because first of all, there's not enough time, and a lot of them probably not going to work, but that's it. All right, that's just another indication that just be careful. I'm just telling you, when the only way up, the only way is down, and the only way is down, the only way is up. Back in 2007, for 2005, 2009, folks, on March the 5th, when I posted that chart, I said we're going to have the largest rally since 1938. I couldn't get anybody to believe me. I can't get anybody to believe me today either. So that's another reason to be really careful up in here. So that's just watch. We'll see what happens at the end of the week, and we'll see where this. But if it starts down, the indication, folks, is if I'm correct, you're going to see a move in the Dow at least 600. Well, 600's got to. That's a piece of cake. You'll see at least 800 to 1,000 point down move in the Dow Jones. Or it could come in the NASDAQ, because that's the one that's most. You'll see a move of more than 200 points in one day in the NASDAQ. That's a $4,000 move. That's big. When you see that, then you know that, maybe the old cowboy nailed one here. But, in fact, it will or will not happen. I don't know. All I'm telling you is watch for that. because if you'll be able to see that, you'll be able to do it. In 1987, when the market was topped on August the 25th, 1987, I was a guest at FNN in Los Angeles with Bill Griffith, because I had been scheduled there because of my Astro Cycles book was pretty popular, and I'd got lucky and made a couple of nice calls. And I told you, Bill, to that day, I said, sometime in the month of October, remember this was August, the third week of August 1987, I said some day in the month of October, the Dow will be down more than 300 points. And the biggest day before that had been 191 Dow points. Well, it was down 550 that day. In fact, it gapped down 190 points on the open, but to be down 550, I believe, on the day. And the next day, folks, the best buying opportunity of the 1980s would happen, because we were setting exactly at a 61% retracement of the low from August the 9th of 1982. So these markets do repeat, and they repeat with some fervor many times. So let's remind ourselves that we have to be very, very careful in here. I'm just trying to give you the best of what I see. Sometimes it works, sometimes it doesn't, but this is very important, folks. I appreciate the comment, Paul, but it's my responsibility as a trader and a fellow looking at this stuff. This is what I see, and when I'm this adamant about it, pay attention, folks, because I put a lot of work in this. I mean, I put hours and hours, because this is what I love to do. And I'm relatively good at it. I'm certainly not. And when these things fail, good night. They can go up for a long time. We've seen this more than once. But the fact that we're 10 weeks up, you just don't find 10 weeks up. 10 higher closes in the Nasdaq is just absolutely unbelievable. It's just such a incredible pattern that it might fail. But by golly, if it does fail, let's just look at this, just because I already know what the answer to this is. But if this thing fails, look at this. If we explode to the upside from here, not only did it fail, but it is the top. In other words, not a top, it's the top. What I'm saying right now, we could be looking at an A top. If we're strong this week, it's the top. And this is going to be the end of it. And we're going to have something that's going to be really careful for. So these patterns repeat, but when they don't, you have to pay close attention to it. But what we're seeing here is either an acceleration blow off to the top, or we're topping here in the next day or two. And this is the first time I've said something like this. And believe me, in the newsletter, I warned everybody. I said yes, and the trade that we had has worked. I mean, we're not going to lose any money on that Russell trade. When you stop and think, the Dow's up 650 points, and we still have a profit in the Russell. Are you kidding me? At least we did the right contract. And the Russell is the number 2. The number 1, of course, is the E-mini S&P. Number 2 is the Russell. Number 3 is the NASDAQ. And the 4th one is the Dow Jones, which, that's a very, very, it's the thinnest of all of them. Plus, it's not a very good index because it's only 30 stocks, and they are, price weighted. They're not cap weighted, so it's not really fair. That's because of the Dow Jones family. So remind ourselves of that. Someone asked a question about the hyperinflation. Folks, there is some inflation out there, but we haven't seen any hyperinflation yet. We've seen price increases in food, but much of that has been due to COVID and the fact that the delivery and distribution of the stuff is more difficult. That's the main thing. Price of bacon has tripled in price, but that's part of the fact that they can't deliver it in time to certain areas. Same thing with gasoline. We're near where we were before COVID, and gasoline, that hasn't gone anywhere. Real estate has gone crazy because people moving from other areas, and also interest rates dropping quite a bit. So all that fits into the program. But right now, we don't see any really super hyperinflation. The velocity of money is not there, folks. If the velocity of money starts to pick up, you're going to see inflation, but that has not happened. Look what the banks are doing. Goldman Sachs and also JP Morgan and also Wells Fargo. They've stopped lines of credit for people that have, scores of 800. They say you no longer have a line of credit. Well, don't use it anyway, so it didn't make any difference. But they said, we're not going to give it to you anymore. Well, that's okay. You never gave it to me anyway. But there's a reason for that. There's just no velocity of money. And inflation comes when you have a velocity of money that increases. And the Fed is not seeing that. And they're just pumping it up to bejeebies, putting money into this market. And someday, when the fat lady starts to sing, and she might someday, then that's the one that you have to really be really be careful about. So remind ourselves of that as we come in here to the last minute of the show. We've got to pay for a few commercials here, and then we got 2 minutes to go. If you're able to get in, it's 877-927-6648. That's one of the things that you want to keep in mind that we should be doing. We just had a nice little $3 jump here in the S&P. There must have been another buy program coming in and say, we'll show this guy about a top in the market. So that's really what we're paying attention to here as we're moving in here the last 10 minutes of the trading here. Anybody has any? I've already mentioned 877-927-6648. If Tom was here, he'd probably have the people coming in like crazy. We'll be right back. Tom?
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
Markets can rise and fall like the tides. Subscribe to Basil Chapman's newsletter, The Opening Call, and you too can ride the wave. Basil Chapman is an authority in technical analysis. His Chapman Wave trading system has been helping traders identify trends and capitalize on momentum in the markets since 1984. TFNN invites you to test Basil's proprietary Chapman Wave trading methodology with a monthly subscription to the Opening Call newsletter for only $149. Your subscription to the Opening Call comes with a 30-day money-back guarantee, as well as daily market updates on key indexes, stocks, and commodities. Ride the wave. Sign up for the Opening Call risk-free today.
Introducing Primal Edge.
Today, it's even more important to take a supplement that complements your health. Primal Edge is specifically formulated to boost your immune system and help with weight loss, better sleep, stress reduction, and the need to detox.
Our early ancestors found all their nutritional requirements in the wild environment. But today, our food sources don't contain the vitamins, minerals, and nutrients that we need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated humic and fulvic acids, nature's preferred delivery system. They've been called miracle molecules because, like sunlight, air, and water, without them, life cannot exist.
That's right, Ellen. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge. Just $89 exclusively at TFNN.com.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Okay, we're back, folks. This is Larry Pesavento setting in for Tom O'Brien. I want to remind you, folks, that on Wednesday, the 14th of July, Basil Chapman is going to do his first of 2 webinars. The second one will be on the 28th of July. Folks, you cannot spend any better money on your education than listening to Basil Chapman. He's got some wonderful historical stuff. His work with cycles is fantastic. His pattern work with wave counts is terrific, and he gives you more value than you could ever ask for. So you want to increase your education and learn something about these things, I would certainly recommend it, and especially now because we might be at a point in the market where you have to be able to turn yourself around and maybe do something a little differently. So try to do that. That will be Wednesday, the 14th, and then on the 28th of July, will be the follow-up. Plus, you get his subscription opening call stuff for a couple of months too. So it's a good deal. Check it out on TFNN. Okay, we're coming in here to the close here. We just made a new high in the S&P. We hit 43.79. The market's going to probably jump around here, be a little bit crazy at the end like it is. But anyway, pay attention to these patterns, folks. They don't work all the time, but when they do, you'll know. And you're going to see the first indication when you're down more than 600 points in one day in the Dow, down more than 50 points in the S&P, and down more than 1,200 or so. But the Dow Jones will sometime between now and October will be down more than 1,200 points in one day. That's a slam dunk in my opinion. But again, I'm just looking at it from a technical standpoint of what's happened in the past when you had so many people on one side of the market. Somebody has to be taking the other sides of these trades, folks. It's not just, people just buy. Somebody has to take the other side, because every buyer there has to be a seller. Listen, live every day in an attitude of gratitude, and may God bless. Tom will be back tomorrow, and keep those cards and letters coming in, folks.